Hey, what's up YouTube? Fritz Investing back with another video, and today I wanted to give you guys my $24,000 Robinhood portfolio update. So in today's video, we'll be talking about how my portfolio has been performing recently. We'll also talk about my top 3 performing stocks, and finally, I'll give you guys all the dividends that I'll be receiving for the month of October. If you haven't done so yet, please don't forget to like, comment, and subscribe to the channel. And with no further ado, let's get right into the video. So you can see that today the portfolio is worth $24,145. It is election day. I was up $433. For the past week, I'm actually down $496. For the past month, I'm down $694. For the past 3 months, I'm down $55. For the past year, my portfolio has appreciated $658. And finally, all time, the portfolio is up $1,298 or 5.69%. As far as the highs and lows of my portfolio, I'm taking you guys back to April when the portfolio was worth its lowest amount, which would have been right around $18,000. I was down $4,800 at that time. And at the end of August, the portfolio was worth its highest amount, which would have been $26,000. So what I'm doing now, since the portfolio is down a little bit, is increasing my positions in stocks to increase my passive income in the future. Next, we'll talk about my top 3 performing stocks. So the first stock that I want to talk about today is a company that I'm sure you're very familiar with, which is Amazon. So for each one of my top performing stocks today, we'll look at some key statistics. We'll also look at the most recent earnings report. And finally, we'll look at my participation in the stock itself. For Amazon's key statistics, I obtained this information from Yahoo Finance, as Robinhood does not provide this information on the stock's main page. So we can see that the market cap for this company is $1.53 trillion. The beta of this company is 1.35, which means it's a little bit more volatile than other companies on the market. The PE ratio, which is the share price divided by the earnings per share, is 89.13, which means that customers expect great appreciation from this stock, and the earnings per share for the trailing 12 months was $34.20. Next, we'll talk about Amazon's most recent earnings report, and we can see that even in the midst of a pandemic, Amazon has performed extremely well. Operating cash flow increased by 56%, free cash flow increased by $6 billion to $29.5 billion, net sales also increased by 37%. Operating income increased by $6.2 billion in the third quarter, and Amazon was able to add 400,000 new jobs with a minimum wage of $15 per hour. I think this is simply amazing. For net sales, Amazon was able to increase its net sales in North America by almost $17 billion as compared to last year. Internationally, it was also able to increase its net sales by $7 billion, and Amazon Web Services, or AWS, was also able to increase its net sales by almost $3 billion as compared to last year. For Amazon, we can see that the share price is $3,048 right now. It was up $43 today and stayed flat after hours. It's off its 52-week high, which was around $3,500, which to me represents a great buying opportunity. For the past year, Amazon has appreciated almost 69%, and over the past 5 years, Amazon has appreciated 386%, which is simply amazing. I think this stock will continue to amaze in the future. For my market value, it's worth $3,060. I paid $2,748 for the stock. My daily return was $43, and my total return has been $312 or 11.15%. I own just over 1 share of this stock for an average cost of $2,737, and it comprises just over 12.5% of my portfolio. For its earnings per share estimates, Amazon crossed its earnings per share estimates by almost $5 per share, and I think that with its recent performance, it represents a nice buying opportunity to continue increasing my position in this company. Next is another company that I'm sure you're very familiar with, the most valuable auto company in the world by market cap, and this company is Tesla. Looking at Tesla's key statistics, we can see that the company is worth just over $400 billion. The beta of this company is 1.69, which means it's even more volatile than the previous company, Amazon. The PE ratio is an astounding 810, which means that customers expect an extreme appreciation in the future, and the earnings per share was 52 cents for the last 12 months per share. Tesla also did an amazing job in their last earnings report, which was published last week. They were able to increase their cash and cash equivalents by $5.9 billion, and they have $1.4 billion worth of free cash flow. They're able to increase their net income by $331 million, and they also had a record amount of vehicle deliveries of 139,000. Despite being in a pandemic and offering premium price vehicles, Tesla was also able to perform very well. For production, Tesla had a 4% year-over-year increase in its S and X production and a 60% increase in production of the Model 3 and Model Y. For their deliveries, they're up 44% year-over-year. They're able to have a 33% increase in the megawatts of solar deployed, and they were also able to increase their supercharger station and their supercharger connections by 7% respectively. Tesla has a tremendous opportunity to increase their capacity once they get all their gigafactories built. Currently, they have a current capacity of 840,000 production vehicles that they could potentially build. If they have a 500,000 capacity for each one of their factories, they'll be able to produce over 2 million electric vehicles per year. So for Tesla, two of their goals are to increase the range of each vehicle and decrease the cost of the battery, and they plan on doing this by packing the batteries more tightly, modifying how they manufacture each cell, modify how they source their silicon for cheaper silicon, also being able to produce their cathodes in-house, and finally integrating more of the battery into the frame of the vehicle, which will hopefully one day increase the range by 54% and decrease the cost of the battery by 56%. Half of the cost of an EV today is the battery itself. Tesla right now is working on full self-driving for all of their vehicles. They're also improving their software, and they hope to decrease the battery cost by 56%, which will enable them to produce a $25,000 vehicle, which will put them in price parity with other combustible engine vehicles currently on the market. Tesla's stock price today is $424.50. They were up $23.39 today, and they were actually up 60 cents after hours. For the past week, the stock has been up a little bit, but for the past month, the stock has actually been down. Other than that, they performed really well. For the past 3 months, they're up 40%. For the past year, they're up 574%. And finally, for the past 5 years, they're up an astounding 915%. They have exceeded expectations year after year. Right now, I have $1,709 worth of this stock. I paid $1,171 for it. My daily return has been $96, and my total return has been $538.02, or I'm up almost 46%. I purchased this stock for an average cost of $290.91. I own just over 4 shares of this stock, and it comprises just over 7% of my portfolio. Before their split, I owned half a share of this stock, so they had a 5-to-1 split, which means I got 2.5 shares at the end of the day. Tesla also exceeded their expectation for their earnings per share by 20 cents. This stock has done really well, and I'm going to continue to buy as much of this stock as possible. Please don't forget to like, comment, and subscribe to my channel. My best performing stock thus far has been none other than Apple. As far as key statistics, we can see that the market cap for Apple is $1.88 trillion, making it the most valuable company in the world. The beta for this company is 1.31. The PE ratio is 33.67, and the earnings per share for the last 12 months was $3.28. The current dividend for this stock is 20.5 cents per share. For Apple's earnings report, I think that they did a good job of beating expectations. Their product sales slipped a little bit as compared to the past 3 months by $1 billion, but for the past 12 months, it grew by $7 billion. Their services department also increased by $7 billion over the past 12 months, and over the past 3 months, it increased by $2 billion as compared to last year. For Apple's net sales, I think it's a little bit misleading when it comes to the iPhone because Apple had to release their iPhone a little bit later this year, so those figures aren't counted. But for their Mac, their iPad, their wearables, and their services department, this more than made up for it, increasing their total net sales by $500 million. Apple, in my opinion, is swimming in cash. They were able to increase their cash and cash equivalents compared to last year by almost $25 billion, and they were able to increase their net income by $2 billion. Apple's stock price today was $110.25. It was up $1.67 today, and it was actually down 19 cents after hours. For the past week and month, it's been down a little bit and been having a lot of volatility, but other than that, it's been ascending up pretty nicely. For the past 3 months, it's up 72 cents. For the past year, it's up $45. I do believe that the antitrust suits, the pandemic, and also the presidential election has played a part in Apple's share price. And over the past 5 years, it's up $267. For my participation in this stock, I own $6,014 worth of this stock. I put in $4,378. My daily return was $81, and my total return has been $1,636.93, or up almost 38%. This is enough to buy me a brand new iPhone 12, although I would rather take that money and reinvest it back into my stock portfolio. My average cost was $80.26. I own just over 54.5 shares of this stock, and it comprises almost 25% of my portfolio. As far as earnings per share, we can see that it beat its earnings per share estimate by 3 cents. Now it's time for one of my favorite parts of the video, which is the dividends. My first dividend today came from Vanguard Total Stock ETF, and they paid me 40 cents on October 1st. I own 5 shares of Coca-Cola, so on October 1st, they paid me a total of $2.06. For owning 1.12 shares of Nike, I was paid 28 cents for my dividend. Realty Income, which is a REIT, paid me $3.39 for owning 14.48 shares. Stag Industrial, another REIT in my portfolio, paid me $2.92 for owning 24.35 shares. For owning 173 shares of Lexington Realty Trust, they paid me $18.17. Intuit, which is the company that makes TurboTax and QuickBooks, paid me a robust dividend of 2 cents. My last dividend came from Dollar General. They paid me 22 cents for owning 59% of one share. If you found this video helpful today, please don't forget to like, comment, and subscribe to the channel. And I would love to hear your thoughts. Do you think that Apple, Amazon, and Tesla are good companies to invest in? If not, what companies are you guys investing in? Please don't forget to comment down below. I would also like to remind everyone to continue wearing your masks, practice that social distancing, and wash your hands so this pandemic doesn't spread to you. Also, regardless of whoever wins the election tonight, I would like everyone to practice the golden rule and treat everyone the way you want to be treated. I truly believe that if more people practice this, then the world would be a much better place. Invest in your education, invest in yourself, increase your assets and decrease your liabilities so that one day you can attain the financial freedom that you deserve. This has been First Jones Investing with another update, reminding you to keep getting that passive income. Thank you for taking the time to watch my video today, and I'll catch you next time.